Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information, meet you where you are financially so that you can stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to talk to you about how you can prepare for yourself for that long term of building wealth. But first, I want you to focus on your retirement number. If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you will be notified every time I upload a new video. So today, guys, there's so much to think about when you're thinking in terms of financial independence and just simply your retirement number. Now, oftentimes that can necessarily meet, often sometimes be what number you need in assets. But I also want you to think about it in terms of this. What amount do you actually want to and desire to live on for the type of lifestyle that you want in your retirement stage, in your financial independence stage? And the reason why I say that, and I keep saying financial independence, because you can create that number way before what is called traditional retirement age 65 plus. But I do want you to have that number in mind. And so now we want to talk about how you can determine your retirement number. So this is one of the most crucial pieces of your financial plan, because to be quite honest, there's a reason why you're budgeting and saving and investing. You're trying to create this number of cash flow that you don't have to necessarily put in hard work to work for. So I want you to first think about, how do you get to that number? Well, you have to think about, what type of lifestyle do you want to live? Lifestyle, you can start to mirror the things in what's going on in your current lifestyle. So you can currently look at, what is the net income that I have? Is this even enough? So if this isn't enough, then the second thing I want you to do is, I want you to say you make $5,000 in a month. I want you to subtract out housing expense. Why? Because by the time you're financially independent, you should probably have at least a paid for house. And that will make this equation a lot simpler. So $5,000. $5,000 a month means $60,000 a year. Means that's how much cash you need to generate for that. So how do we get there? Well, there's a couple different ways you can do that, but we're still focused on, how do you come up with this number? Look at your current lifestyle. What are the things that you want to do that you can't do now? Is 5,000 seriously gonna actually be enough for the type of lifestyle you want to live? If that's not enough now, and you still have desires that you want to create and things you want to do in terms of your lifestyle, then it's not going to be better when you get to retirement. So maybe it's 6,000, maybe it's 7,000. How do you get to that number? What is the actual number? Well, the fact is, this is where personal finance is, again, personal, because I can't tell you what you want to live. You have to actually think and kind of dream about, what do I want this lifestyle to look like? I can just tell you, this is the number. This is how we're going to get you to that number. So in this example, I want to use I want to use $7,000. The reason for that is, the average person right now makes about $62,000 a year. So if you want to live just on an average income, by the time you get to financial independence, if you're past 10 years plus, that number will be way different. But for the sake of right now, let's use that $62,000 average. 62, like I said, is about $5,500 a month or $5,200 a month. Not too bad. So how do we get to that number? Well, if you watched any of my videos before, I want you to do one thing of, hey, $1 million portfolio in the stock market can produce, if you're doing the 4% rule, that's $40,000. So that's over half of your money right there. What about if you work this entire long career, you average that income, how do you get to the other $20,000? Well, the next thing you want to consider is the average Social Security payment is about $1,300. So if you got $40,000 divided by 12, it's about 40, I want to say about 4,000, 4,800 a month, something like that, 4,400 a month. Needless to say, with the extra for Social Security, you'll be well over $5,000. So my thing is, if you're already doing that with those two pieces, is that going to be enough? Well, if it's not enough, then what else could we do? Number one, you can draw more money off the 1 million. You can, instead of drawing 4%, you can draw 5% or 6%. Or if you have a good year of 13% returns, you can take more. That's one way of doing it. Number two, you have a business to give extra money. Number three, you can have a piece of real estate that you're renting out that adds you extra cash flow in the month. There are a lot of different ways to get that number up for you. So those are things I want you to think about. Well, how do I know if I'm even on track to get 1 million versus another million? Well, the thing is, I want you to understand, how do most people kind of figure out if they're going to have $1 million portfolio? The real key I like to tell people is, can you get to $100,000 by the time you're 40? If you can get to $100,000 by the time you're 40, by the rule of 72, if you didn't deposit anything else, 40 to 47, and you're getting on average 10% returns, like what the S&P 500 typically does. So 10% returns means you're doubling that money about every 7 years. So $100,000 at the age of 40, by the time you're 47, you should have $200,000, okay? By the time you're 54, you should have that 200 should turn into $400,000, okay? By the time you're 61, that $400,000 should turn into $800,000. And so the 61 average retirement age, 65, 66, something like that. So 7 plus 61, 68, $800,000 would turn into 1.6 million, about 67, 68, by the time you turn 68 years old. That's just the rule of 72 double feature. Now, Jonathan, that takes me over that retirement. What I want you to remember is the factor in this equation is, if from 40 and you have $100,000 invested already, and you keep consistently investing every month, whatever that amount is, if it's 15%, 20%, whatever that money is, that 1 million number starts to come closer to you. So it will likely probably be, you'll probably cross that million threshold mathematically somewhere around 58, 60 or so. But you'll do it early, is the point. That's the factor of the Rules 72 that doesn't factor in. It's just factoring one lump sum. Needless to say, it's important for you to understand how to get to that number. But this whole number thing is based off, what lifestyle do you want to live? What do you want to do? And how much do those things cost? If you add that up, and I know it's difficult to figure out, well, how am I going to get the money? I don't want you to think about how you're going to get the money. I want you to think about, how much do you need in the month, or how much do you desire in the month? And be realistic. Don't say, hey, I want $20,000. Hey, you may not have time or have made the decisions right now to where you can have that. Not saying you can't, but you would have to change some things up. We're just talking as simple as you can get it. If I could produce $5,000, $6,000, $7,000 and not have to work passively, what does that look like? And that's where I want you to start your ideas at. Think about what lifestyle you want to live. Next, how much does that lifestyle cost? Then third, you look at, where are you now, and are you on track? Or do you need to switch up some things? Or do you need to plan for some other investments to make up for some of that time that maybe your portfolio may not get to in time? These are ways that you plan your lifestyle. And then once you plan your lifestyle, say you're already on track, now is how can I improve my current lifestyle? How can I give myself more margin in the month? And how can I build wealth, meaning in my daily lifestyle? Retirement and wealth, those things do go hand in hand, but think about it like this. I can tell you you're on track for retirement and that you'll have a couple, $2-3 million by the time you're 65. That'd be wonderful, right? But do you really want to wait till you're 65 to actually start to experience that lifestyle that's waiting for you? No, you want to enjoy and you want to start to learn how you can create that great lifestyle you're working for when you're older right now, while still having more margins, while having still more resources to enjoy more things. This is how you get ahead financially. This is how you begin to really change the course of what your legacy is going to be. Hope you guys enjoyed this video. If you like it, give it a thumbs up. If you haven't already, please subscribe to the channel. And I can't wait to see you guys in the next video.